Hello everyone, Clifford Bennett, Chief Economist at ACY Securities. We've had some interesting data out of late. Of course, the employment situation in the United States has started to deteriorate. We all know about that. And the market celebrated that because, in the hope yet again that this would mean the Federal Reserve starts cutting interest rates. Just not going to happen. Haven't changed the tune on that. Still, that is the forecast. The Fed will be at current levels or higher at year's end. So the market's sort of making new highs. Apple hit an all-time high. Tesla had a sort of consolidation day, but it's still well down from its historic highs. But it's had a very good rally on the back of the AI concept, that Tesla will be one of the parties that will be making the most of that shift in the world. So that's certainly been a big part of Tesla's share market rally. But overall, I still see the market a little bit fractured, and it is the big name tech companies that are doing well and driving the indices higher, and a lot of more middle ranking to smaller companies are absolutely struggling in the US economy at the moment. And I'm not sure why people talk about a strong US economy. There's no criteria that is strong for the US economy at the moment. But coming to this part of the world, today we've had data that shows that both China and Australia really are struggling a little bit here. The PBOC, People's Bank of China, has had to actually ease monetary conditions a little bit to try and support the economic slowdown that's occurring there, because it's quite a fast slowdown, because it's it's the other side of a peak recovery. Imagine a fast recovery out of the COVID lockdowns, and then the market the economy settles back to what's a more natural state. So it feels like a sharp decline, but it's just really all of this volatility post those extreme COVID lockdowns that China had for longer than the rest of the world. So China's economy is slowing, but I wouldn't panic about it. The PBOC support will help, but do expect, as has been my central scenario for some time now, for China to perform strongly, outperform the West, but by not the same kind of margins that it once did. And I think if you can understand about that, see the Chinese outlook in that way, nothing will be surprising you over the next few years. In regards to China, still strong growth, but not that sort of fast-paced shift from agrarian to consumer society, which of course was a historic event in the entire history of the world, and it can't be continued forever, but still very strong growth for China. In Australia, though, it's a little bit more precipitous, because the Reserve Bank continues to raise rates in a way that I do not think will actually slow inflation. Sure, inflation will slow if the economy is brought to its knees, but my argument is that the RBA doesn't need to do any more rate hikes for the economy to be slowing and for inflation to be unwinding and peaking out here. So I think the RBA, I always forecast 2 years ago, they were making a mistake. Mistake number one, I actually called it this, the two big mistakes the RBA will make. One, they won't raise rates when they should be, and two, they will then have to chase with too aggressive interest rates hiking sort of cycle later on, which is exactly what they've done, harming the economy. But underlying all this is the fact that the Reserve Bank doesn't understand the nature of modern inflation in the world, let alone in Australia, which is a far more nuanced beast. And it's very aggressive, yes, but the 1960s, 1970s, 1980s playbook is not really appropriate. And I think the RBA's already gone too far, the Fed's already gone too far, but I still forecast they will raise rates further because they do not understand this. They've never understood real-time economic scenarios. They've only ever looked for data proof of anything they've ever done instead of looking forward into the future where there is no data, of course. So in Australia today, we had consumer sentiment. Now, people have to understand that consumer sentiment in Australia is about the lowest it's ever been. In fact, it's at the same level as the 2008 financial crisis and looking like it could go even lower. That's how bad consumer confidence is in Australia at the moment. Business confidence, it's held up a little bit better of late, post the coast, during the post-COVID boom period and economic consolidation. Business sentiment has held up, but it is again falling, and it's way below historic averages, so it's not a good number. And it looks like that business confidence could also fall off a cliff here. So with both consumers and business managers looking to retrench in coming months in terms of spending or business activity, or consumption generally, the economy is going to slow. And the Reserve Bank will continue to raise interest rates because it's going to be a long time before the nature of this inflation wave actually diminishes enough for these central banks to say, oh, we did our job, we stopped inflation. It won't be because of them. It'll be because of more natural economic cycle forces, but they will claim it, of course. But right now they're adding to the pain that, we often forget that inflation itself is doing real economic damage and will generate an economic slowing. And then you've got these central banks like the RBA using the 1970s, 1980s playbook, as I said, and hitting the whole economy on the head with this very ham-fisted approach of those style of monetary policy decades ago, because they can't learn, obviously. They have a learning disability. We should feel sorry for them. So the Australian economy is naturally slowing. It's being hit hard by extreme inflation, and the Reserve Bank is making it even worse by doing rate hikes that are actually inflationary in this modern economy. So it's a diabolical situation for the Australian economy, and with China being more mediocre than most people expected, do not expect Australia's export sector to save the day the way it did during the GFC. So economic recession in Australia, I've been forecasting it all along, it's still coming towards us, but it's coming towards us now at a far faster rate than was previously the case. It looks to be just around the corner. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.